I wanted to go on my market outlook for the short term, the midterm of 2025, leading up to, let's say, March or April. And I wanted to discuss some things. But before I do so, come over to ZTRADEZ.net, check out our terms and conditions page, read our terms and conditions as well as our disclaimers. If you don't agree, do not watch the video. If you do, watch the video and also join the Discord. It's completely free to join. Let's jump into it. Let's turn the linear chart on. I like this. I don't know what these auto fibs are. They're incorrect right now. But let's just take a look at some stuff over here. Now, I've talked about this before in October. I wrote a whole article on this. I'm going to have a link to the article. What's going to trigger the drop, right? If it's a really strong market, there's a lot of liquidity. If something bad happens, we just bounce. If there's not a lot of liquidity and something bad happens and we're in the scenario we're in, we drop and it goes hard. Do I believe we're going to drop extremely hard with no bounces? No. Do I believe we're going to have a correction? Quite possibly, because things are looking sketchy here. Now, it wouldn't surprise me if the market just didn't make sense and kept running, because it can stay in that state for like a half decade. It can stay in that state to where it doesn't make sense going up on the good things happening with the market, where it's overvalued and it can run for a very long time. Things where it makes sense, where it's it's undervalued, the market as a whole, PDEs, that doesn't last long, right? So I wanted to talk about this. So let's jump into this. The federal funds effective rate. Federal funds rate. Okay, I've done this before in a video. We're going to do it again. And we're going to talk about it because things are starting to unravel and unfold. I thought it may be the unrealized losses from the banks. Maybe it was that. That's what I put in the article. But I'm trying to predict what a black swan would be. And that really doesn't work. I should have just not added there. What will it be is what I should have said. But let's take a look at this. 1999, we hiked interest rates. Right? We were hiking them for a little bit before that. Peaked 6.5. And then we cut. This is not the stock market. And then look at us. We're not going to count 9/11. Let's just go here, right around here. Before we'll go up to August, because obviously we dropped during 9/11. We know why, so you can't really count that too much. But that's over in this range. August 2000, and here we are, August of 2001. We're at 99 on SPY, and we were at 155. That's like a 55%, 56% drop already before 9/11. Okay, so we hiked interest rates and then we cut them. .com bubble burst. 9/11 didn't help. Didn't help at all. But that was short-lived. It was over after that. But then we declared war, and there was other scenarios in here that were factoring that we were still going to drop. Maybe not as hard, but we were probably going to drop quite a bit. Probably, I would say, to this range right here, where it went, 93. And we were at 99 before 9/11 in August. So we hiked interest rates and then cut them. Everyone's thinking about COVID, where we were already bottomed then when we had dropped hard, and then we're cutting interest rates, injecting all this liquidity in the market, buying up paper. Stock market went parabolic. Right, shooting 100K loans out to PPP loans out to businesses for them to just marketing, hiring people. Stuff was just shifting and moving. And let's do this again. We hiked interest rates in 2004 all the way till 2007. We started to cut. Right, we had a good 4 to 6 months of cutting, of rates dropping. And then what happened in 2008? Everything started unraveling, didn't they? Okay, that's right over in here. I wish I could just zoom in on this area only, and it's not going to let me. There's a way to do it. I'm not going to figure that out right now. Let's turn the linear chart back on. All right, we are at 156, and we dropped down to 67 in 09. Hiked interest rates, then cut them. No, it's that history hasn't always went like COVID, right? We'll get to that too. There's another way to look at COVID. What really triggered it? Okay, left it at pretty much zero all of Obama the whole time he was in. Second Trump got in, they started hiking, and he's like, "Why me? You left it at zero for Obama." He was mad. This is his attitude. And then he finally got on Jerome Powell, which is why they have beef. Right there. This right here is why Trump and Powell don't like each other. He's like, that's not fair, right? It did need to go up, right? Hanging out at like, 2.5 to 2, perfect. Leave it there. Maybe even 3. I agree with Powell, but Trump didn't see it as fair because, Obama got to inherit a very bottomed market over here, literally the bottom pretty much. And then he released a stimulus, which Bush should have done. And Trump's like, that's not fair. They started to cut. You remember what happened? The crash of 2018, which was right over in here. This doesn't look bad, but if you guys were in this was insane. 291 and we dropped to 234, and it was fast, all in like 2 months, 2.5 months. Trump got on Powell. He started cutting. Things looked hunky-dory here. In 2019, we end up going from 230s all the way to 3. We went up $100 on SPY. That's 1/3 of the price. That's insane. It's not like it's going from 400 to 500. It's going from 230 to 300 and almost 40. It's 339 it topped out. I remember it perfectly. All right. But we were cutting after hiking. And then COVID happened. Now, I'm not saying, we were going to drop regardless. But at the end of the day, something always triggered it off. Right? Hike then cut .com bubble. Hike then cut 2008 financial crisis. There was something that happened. Hiked, then cut COVID. Hiked, now cutting. This is us right now. Tariffs. This is what's scaring me right now. And we'll talk about some of the things that I see. Well, if Canada starts shutting some of the energy off coming this way, gas prices could spike, CPI could come in hot. The economy runs on cheap energy. If energy is cheap and inexpensive, the economy's doing well. If it's expensive, it's not doing so well. Look at '08. You all remember that? I remember being broke in college. I remember gas prices. I had a V8 Lexus, one from the 90s, and gas was like $4.50 a gallon. It was ridiculous. I would get like 1 gallon of gas when I go out $5. It was crazy. It was expensive. And we had '08 happen. I'm not just saying because gas prices were expensive, but you need cheap energy to have a functioning economy. If it's expensive, the economy does not function properly. Inflation comes in hot. Things are not doing well. We are very sensitive right now. If they end up hiking, if CPI comes in hot in a time like this, and then Powell comes out and says, I think we're going to have to hike interest rates. Game over. Then there's too much uncertainty because right now the certainty is, okay, they're going to slow down rates, but they were going to cut. We have the projections up to 2026. This is going to happen. That's going to happen. And if that halts, that's not good. That is not good. I think that we would fall very hard. Who remembers the tariff wars under Trump before? Right? I'm not being biased. I'm just trading. I'm going off of history and what it'll do to the market. Yes, it'll drop the market. Will it save me a boatload in taxes if I didn't have to pay any? Yeah, but then my investments would tank. But if I sell them or I'm playing the downside, then that could offset that. I could rebuy the bottom, right? This looks sketchy right here. So we popped up. There was this gap that needed to be filled. That was filled. There was another one right here, right there. We filled that on that drop, right? We have one more to fill down here. 585. This doesn't look good. I wish this candle was a little bit smaller, or this one was bigger, right? So we could draw this perfectly, but we closed below that trend line, and I'm worried. I can toy with this a little bit, even like that. That's kind of sketchy. You want it to hit 3 times. 1, 2, 3. That doesn't really count as 1, but right, we have 3 times here. There's 3 places that it hit. So ignore that. I know that looks kind of weird. Just ignore that. But this is peeking through right here. That's sketchy. And I think that we're going to see more downside on Monday. And this would be the target for that gap to be filled. I hope the trade war doesn't last long. They come to an agreement. Everyone comes to an agreement. And then we come out of it roaring. When we came out of the China trade war, the stock market exploded. I mean, it ripped. Now, let's turn these trends on. Oh, is that ugly? Is that not ugly? Let's turn the fibs on, see what we got here. Auto fibs. I don't know where this is topping out. I'm going to have to toy with it. Let me turn the indicators off. Yeah, so I'd like that gap to be filled. This was the August dump. You all remember that happened. That was worse than the dump we had this prior week, or the last couple weeks here, when we had the big drop here. 3, 4, 5, 6, 7. Yeah, which was that Monday or was it last week? No, that was Monday. That was Monday, and I thought that was a big drop. Well, the August drop was way more intense, wherever that was. Wherever it was. We're not going to waste time looking at that. But I'd like to see this get filled, and then we have that gap to be filled, and then we have anchor VWAP down here. I definitely don't see SPY going below anchor VWAP. And we have the 200 way down here at a volume shelf and a support. Let's go ahead and shrink this up a bit, right? So huge support here, right around 564, which is very high. 564 is high on SPY. We just teleported so much. It may be nice to have a decent reversal. I'm going to do a separate video on my watch list, but I just want to kind of talk about my market outlook. It's not looking hot right now. And again, guys, there was something that triggered it off every single time. But if some of those things happened in a market where something like this didn't happen, usually it wouldn't really affect it too much. But there's something like it's witchcraft every time, right? Every time. .com, 08, COVID. Now what? Is it tariffs? Is it going to be tariffs? I don't know. We had tariffs before. Inflation was fine. There's more liquidity. Inflation was fine. Stock market didn't hold up too well, but it did okay. It wasn't too bad. It was horrible trading through the trade wars before, and you wanted to be playing the downside. We had pops, you wanted to fade them when the TA aligned. So maybe a time to take some profits. We'll see. We'll see. So, but again, we hike, then cut, .com crash, hike, then cut, 08 crash, hike, then cut. We had a COVID, well, we had the crash of 2018, and then we started cutting a bit, and things slowed down. We weren't going to be raising anymore, not cutting. And then COVID happened, stock market crashed, hiked, then cut. It's looking sketch. We're near all-time highs. We'll see. We'll see how it unfolds. I'd feel more comfortable if we crashed and had something violent happen, and I mean way down on SPY. And then be able to build some nice positions on some of the things that I like. Let's get off this newbie daily here and take a look at this. Yeah, that would be beautiful. We got the 20 EMA right there. That's nothing. 588. Got the 50 at 554. It would be wild. It would be wild if we ended up coming down to that trend line, which would be somewhere over in here, right? Over time. I don't think that's going to happen. If we're really going to start selling off and we're gonna drop and then have slow recoveries and drop and then have slow recoveries and then drop and then have slow recoveries, we could ultimately get to that trend line. Absolutely. The 200 on the weekly here is right at anchored VWAP as well, going off these 2022 lows, just about 2022 lows. So we'll see. We know where it could stop. And when it starts to happen and there's big drops, we have targets. So we'll assess that when and if it happens. I'm not saying we're going to collapse. I'm just saying things are not looking hot right now, and I'm not comfortable in calls. There's one thing I'm going to pull up since this is trade war related, which was Alibaba, which has had a giant pop here. Let's go to a 4-hour. That looks horrible. That looks awful. So, and we also have gaps down here, right there. 86, I'm in the 85s. Alibaba moves weird. I can't really call it gaps because the thing just like teleports around. I'm really not going to try to play a gap or call a gap. But we could have a third candle down here. This doesn't look good. So if you're long on it, I'm short on it. I have puts on this. So, and we're inside here. We weren't above it, then sucking back. We never got above that candle and then started to drop. And there's somewhat of a volume gap here. And we have a volume shelf around 86. Everything's pointing to around 86 to 88. We got anchor VWAP there as well. We'll see what happens. So I'm going to do a watch list video as well as this video. I'm going to release this now. I'll probably release this now as well as a watch list video for Monday. For what I'm going to watch, I'll release that tonight. So just be wary. Keep that in mind. Every time something bad happened and we had a crash every time. I'm not saying that's going to happen, but just keep your eyes peeled. If it didn't, it'd be the first time that we've done that and it didn't happen. And we could hold for 6 to 8 months, maybe longer, before there could ever be a gigantic correction. So also keep that in mind. I'm not saying load puts. Next video coming on my weekly watch list here going into February, weekly expirations of 2/7. If you guys like this, make sure to like and comment for more.